Hello, I'm Dr. Robert Dillon, and welcome to TSP Fund Trading Analysis. Today I'd like to briefly explain why you may notice that AGG charts don't always look the same on different charting platforms. If you compare AGG on TradingView with AGG on another platform, you may notice that the prices, trend lines, or support and resistance levels don't line up exactly. The reason is actually quite simple. Take, for example, the charting platform StockCharts. By default, StockCharts displays AGG as a dividend-adjusted chart. That means the historical prices have been adjusted to account for dividend distributions. Since AGG pays regular dividends, the chart is modified so those distributions are reflected in the historical price series. Here's the same chart on TradingView, also adjusted for dividends. As you can see, the price action is virtually identical. So if you're evaluating the total return of an investment, an adjusted chart is often more appropriate because it includes the effect of dividends. But what if you're interested in the actual historical trading prices rather than a dividend-adjusted series? In TradingView, you can simply switch the chart to unadjusted. If you're analyzing actual historical trading prices, support, resistance, or long-term chart patterns, many technicians prefer to work with an unadjusted chart. So let's draw some trend lines on this chart. This is the unadjusted chart for AGG. Using a weekly unadjusted chart, you can see that AGG has been in a persistent downtrend for the past 5 years. Connecting the lows of 2013 and 2019 and projecting that trend line forward, along with connecting the highs of 2021 and 2026, reveals a confluence of resistance. That suggests AGG could very well decline from current levels. Switching to stock charts and looking at the 10-year U.S. Treasury yield chart, which is an inverse of the bond fund, we see a strong possibility of the yield chart going higher. Here, the yield was positioned in a 3-year converging or contracting triangle with lower highs and higher lows, while the trading range was narrowing, and now it seems to be trending higher from the zone. Because bond prices and Treasury yields generally move in opposite directions, the technical pattern in a 10-year Treasury yield suggests yields could continue moving higher, which would be bearish for the bond market or the F fund. Okay, so back to the unadjusted and adjusted charts. Which one is better? That's the question. Neither chart is necessarily better. The adjusted chart is useful for evaluating total return, all built into the chart, while the unadjusted chart is often preferred for analyzing historical price behavior, support and resistance, and long-term chart patterns, as you see here. The important thing is to know which type of chart you're looking at before drawing conclusions. I hope this clears up why AGG charts can look different depending on the charting platform. If you found this video helpful, please like the video and subscribe to the channel. If you'd like to receive our official TSP allocation changes, not just the chart analysis, visit tspfundtrading.com. Thanks for watching, and I'll see you in the next video.